What if I told you there is a number tied to your checking account that scares a lot of good people for no reason at all? They hear that number, they panic, and then they do the very thing that creates a bigger problem. They pull cash out, they move money around, they stop using their own account like normal adults. And the worst part is this: most of the fear starts with half-true talk and missing details. So today, I want to clear this up in plain English. Because if you use a checking account, this matters to you. I started making videos like this because someone close to me almost made a very expensive mistake. She heard a rumor that the government was watching her checking account balance and that if it went over a certain amount, she could get in trouble. She was ready to empty the account and hide cash at home. Nobody should have to live with that kind of fear. So if this kind of simple, honest help means something to you, subscribe. I'll keep making these videos in a way that feels clear and human. Right now, there are probably two kinds of people watching this. The first person has been hearing talk for years about some so-called IRS checking account limit, and they've never been fully sure what is true. They've been nervous every time they make a deposit. The second person just heard something new from a friend, a family member, or maybe a video online, and now they're worried they might already have done something wrong. If you're either one of those people, you're in the right place. Here's what most people never learn. The system is designed to do exactly what you tell it to do. Nothing more, nothing less. Nobody is sitting there making sure you understand the rules before you move your money. Nobody is calling you to say, hey, don't panic, that rumor's missing a few important details. The good news is, once you understand the few real rules that matter, this gets a lot easier. You do not need to live scared of your own checking account. Your next step is simple. Stay with me until the end so you know which rule is real and which one is just noise. I'm Daniel. I've spent 18 years helping older adults understand money in a way that feels calm, simple, and useful. I've seen people lose sleep, lose time, and sometimes lose real money just because nobody explained this clearly. Over the next 20 minutes, I'm going to show you exactly what's happening, why people get confused, and what you can do today to protect yourself. I'll walk you through the number everybody talks about, what it really means, what happens if you owe taxes, and what steps to take if you ever get a notice in the mail. By the end, you'll know exactly what to do next. So take a breath, settle in, and let's start with the biggest misunderstanding of all. First thing you need to know is this: there is not a simple IRS rule that says you are only allowed to keep a certain amount of money in your checking account. Let me say that one more time because this is where most people get turned around. There is no basic rule that says if your checking account goes over this balance, the IRS automatically comes after you. That is not how it works. A lot of people hear the number $10,000 and assume it means a checking account balance limit. It does not. If you have $12,400 in your checking account because your Social Security, pension, part-time work, or savings all built up over time, that does not mean you broke some rule just by having that money sit there. If you have $22,000 in the bank because you sold your house, downsized, and are waiting to move the money somewhere else, that does not automatically mean you are in trouble. Here's a simple example. Let's say your monthly income is $2,350 from Social Security and $1,100 from a pension. That's $3,450 coming in each month. You live carefully, you don't spend wildly. Over time, your checking account grows to $16,800 because you are saving for a new roof, hearing aids, dental work, or just peace of mind. That is not a crime. That is called being responsible. The real issue is not usually the amount sitting in the account. The real issue is the kind of transaction, where the money came from, and whether there is an unpaid tax problem already on your record. Those are very different things, and once you separate those ideas, a lot of the fear goes away. This is where I want you to be careful. Fear makes people do strange things. I've seen folks pull out $8,000 in cash, then $7,000 more a week later because they thought they had to stay under the radar. All they did was make life harder for themselves. Now they have cash sitting at home, no clear paper trail, and a bigger chance of loss, theft, or confusion. Here's what to do about this right now. Look at your checking account and ask one simple question. Am I worried about the amount sitting there, or am I worried about a specific tax debt, notice, or large cash transaction? If it's just the balance, stop panicking. That alone is not the rule people think it is. Your action today is to stop making money moves based on rumors. Second thing, the number most people keep hearing about is usually tied to cash transactions, not your normal checking account balance. That means actual cash, bills, paper money, not your Social Security direct deposit. not your pension direct deposit, not a normal transfer from one bank account to another in your own name, not a personal check from your daughter. This is the part that almost never gets explained clearly. When people talk about the $10,000 number, what they usually mean is this. If a bank sees cash transactions over $10,000 in a business day, a report may be triggered. That is about cash coming in or cash going out. And yes, smaller cash transactions can sometimes be added together if they happen close enough together and the bank sees them as connected. Let me make that real. Say you sold an old pickup truck and got paid $11,200 in cash. You walk into your bank and deposit the full $11,200. That can trigger reporting. It does not mean you did something wrong. It does not mean you are going to jail. It does not mean your account is frozen just because you made the deposit. It means the transaction may be reported because that is how the system tracks large cash movement. Now let's take a different example. You deposit $6,000 in cash in the morning and then later that same day, deposit another $5,200 in cash at a different branch. Some people think that keeps them under the line. It often does not. Those can be treated as related. The total is still $11,200. That can still be seen as one bigger cash event. This matters a lot for people who keep cash at home. Maybe you came from a generation that trusted cash more than computers. I understand that. Maybe you had $14,500 in a safe from years of slowly setting it aside. One day you decide it's safer in the bank. Depositing it is not automatically a problem, but the bank may need to report a large cash transaction. Again, the report itself is not the problem. The problem starts when people get nervous and try to play games with timing. And let me say something that should take some weight off your chest. If the money is honest and you can explain where it came from, the answer is usually very simple. Maybe it came from selling a car. Maybe it came from a cash gift years ago. Maybe it came from an estate sale, a coin collection, or money you had at home. Honest money with a simple explanation is very different from trying to make something disappear. Also, a lot of seniors hear this rule and worry that every deposit counts the same way. That's not true. If your daughter writes you a personal check for $12,000 to help with a home repair, that is not the same as walking in with $12,000 in paper cash. If you move $15,000 from your savings account to your checking account at the same bank, that is not the same as carrying in a paper bag full of cash. The details matter. Are you still with me? Good. Let's keep going. Here's what to do about this right now. If you need to deposit a large amount of cash, do it honestly and keep simple proof of where it came from. A bill of sale, a note from the transaction, a copy of a receipt, even a short written record in your own files can help. Your action today is this. If you have a large cash deposit coming soon, put the paperwork together before you walk into the bank. Third thing, the real danger for many people is not some hidden checking account limit. The real danger is ignoring IRS mail when you already owe taxes. That is where checking accounts can become a serious problem. Not because you had too much money in the account, but because the IRS can levy a bank account when a tax debt has gone far enough down the road. Now I want to slow down here because this part matters. A bank levy is not the same as a rumor. It is real. If you owe back taxes and you ignore notice after notice, the government can move from asking to collecting. And when they levy a bank account, they can reach the money that is sitting there when the bank gets the levy. Let's make that real with numbers. Suppose a man named Frank owes $8,430 in back taxes from a return that was never fully paid. He gets letters. He doesn't open them. Or maybe he opens them and tells himself he'll deal with it next month. Next month becomes 6 months. Then one day the bank receives a levy when Frank has $3,960 in checking. That money can be held. If he was counting on it for rent, medicine, or groceries, now he has a real crisis. Here's another important detail. A bank levy is usually a snapshot. It reaches the funds in the account at the time the bank gets the levy. It is not the same as a magic vacuum that pulls every future dollar forever. Future deposits are not automatically swept by that same one-time bank levy. But please don't get too comfortable with that detail because the stress and damage can still be severe, and another levy can happen later. There is also a waiting period once the bank gets the levy. The money is generally held before being sent out. That window matters because it gives you a chance to act, not a chance to hide, a chance to fix. A lot of people lose that chance because they freeze up and do nothing. Now, if you're 70 years old and hearing this, I want you to hear the caring part too. The answer is not to live scared. The answer is to respond early. If you get a final notice about levy, that is not junk mail. That is not a deal with it later letter. That is the moment to move. You call the number on the notice. You go to irs.gov and look for payment plan options. If you need a hearing, you can ask about Form 12153. If paying the full amount would leave you unable to cover basic living costs, say that clearly and ask what hardship options are available. A lot of good people think, if I call, I'll make it worse. Usually not calling is what makes it worse. The system is hard enough already. Silence does not help you. Action does. I remember when I first learned how often this happened to ordinary people. It changed how I thought about the whole situation. Stay with me, there's more. Here's what to do about this right now. If you have any unopened IRS mail in your home, open it today, not tomorrow, today. And if you already know you owe, go to irs.gov and search for payment plan or call the number on your latest notice before the day ends. That is your action step. Last thing, trying to dodge the rule can create a bigger problem than the money itself. This is where people get themselves in trouble without meaning to. They hear about the $10,000 cash number, and instead of being straight, they start slicing the money into pieces. A little today, a little tomorrow, a little at another branch, a little through someone else. They think they are being smart. Often, they are just making the transaction look worse. Let's say Linda sells a piece of land she inherited and gets paid $15,000 in cash. Instead of depositing the full amount, she puts in $4,900 on Monday, $4,900 on Wednesday, and $5,200 on Friday because someone told her that would keep her safe. That is exactly the kind of thinking that can create suspicion. The report itself was never the enemy. The attempt to stay under the number is what can start looking bad. And this is not just about large bundles of cash. It can also show up when people use money orders or cashier's checks in a choppy, nervous way tied to the same deal. Again, the point is simple. Do not turn an honest transaction into a confusing one because somebody at the coffee shop told you there is a secret trick. I also want to speak to the small business owners and side income folks watching this. Maybe you rent out a property, maybe you sell equipment, maybe you do repair work, bookkeeping, or seasonal work for cash. In some situations, if you receive more than $10,000 in cash in a trade or business, you may be the one who has to report it. That's where Form 8300 can come in. If that sounds like your world, don't guess. Go to irs.gov and search Form 8300 so you know the rule before the money changes hands. Here's the heart of it. You do not need secret tricks. You need clean records, straight answers, and calm timing. If the money is honest, act like the money is honest. Deposit it the normal way. Keep your paperwork. Don't play hide and seek with your own bank. Does this make sense so far? If something is unclear, keep watching. I'll explain it again in a different way. Here's what to do about this right now. If you have been planning to break a cash deposit into little pieces just to stay under a number, stop. Do not do that. Instead, write down where the money came from, keep the receipt or bill of sale, and handle the transaction in a normal, direct way. That is your action today. Okay, you've made it this far. Most people don't. Let me give you two more things that work alongside everything I just explained. Bonus thing number one is simple, and it can save you a lot of stress. Keep a one-page money file for anything unusual. I mean unusual for you. A large cash deposit, a car sale, a big gift, a transfer after a home sale. Don't overthink it. One folder, paper or digital. Put the date, amount, where it came from, and any receipt or note tied to it. If $12,800 came from selling a boat, write that down. If $9,600 came from cash you had at home for years, and then you added $1,100 from an estate sale, write that down too. Why does this matter? Because 6 months later, memory gets fuzzy. A year later, even honest people start second-guessing themselves. A small record today can save you from panic later. And if a bank employee asks a question or if you ever need to explain a deposit, you won't be searching your brain for details. You'll already have them. Here's what to do about this right now. Before bed tonight, make one folder labeled Money Records and put your most recent unusual transactions in it. Bonus thing number two is a warning, and I really want you to hear it. Do not take tax advice from gossip. Not from a cousin who says he knows a trick. Not from a stranger online who talks tough for 5 minutes and disappears. And not from someone who tells you to pull your money out first and ask questions later. Bad advice spreads fast because fear spreads fast. I can't tell you how many people have been pushed into bad decisions by one sentence that sounds dramatic. The IRS is watching every dollar in your checking account. That sentence is powerful because it scares you. But scared people do sloppy things. They stop using the bank, they lose track of cash, they ignore real notices while chasing fake rules. That is backwards. The better move is to slow down, separate rumor from reality, and act only on what actually applies to you. You're doing great. Most people click away by now. You're still here. That means you care about getting this right. Here's what to do about this right now. If someone has been pressuring you with scary money rumors, stop and verify before you act. If the issue is a tax debt, call the number on the notice or go to irs.gov. If the issue is a bank deposit, speak plainly with your bank about the kind of transaction you're making. That is the action. So let me make this simple. What I just showed you is this. There is not a basic IRS balance limit on your checking account the way people talk about it. The reason this matters is because people confuse a cash reporting rule with a balance cap, and that confusion leads to fear and bad choices. The action you need to take is simple. Stop reacting to rumors, keep records for unusual money moves, and if you owe taxes, deal with the notice before it grows into a levy. That's it. One step at a time, do it today. If you want the shortest version possible, here it is. Having money in your checking account is not the same as doing something wrong. Large cash transactions can trigger reporting, and that alone is not proof of trouble. The serious issue begins when people try to hide honest cash or ignore real tax notices. That is the whole picture in plain English. And I want to add one gentle reminder here. If you're older and you handle your own money, that is something to be proud of. You do not need to feel embarrassed for not knowing every tax rule. Nobody taught most people this clearly. What matters now is that you understand enough to protect yourself. And now you do. One thing before you leave this page. Think of one person in your life who needs to hear this. Maybe it's your brother who still keeps cash in a drawer. Maybe it's your neighbor who gets nervous every time she goes to the bank. Maybe it's someone from church who has been worried about money ever since they heard one scary rumor. Send them this video. One share could save them from making a bad move. That's all I'm asking. And if this helped you feel calmer and clearer, subscribe. I make these videos because too many good people are carrying money stress they don't deserve. If I can make one confusing thing feel simple, then this channel is doing what it was meant to do. Next time, I'm going to show you what happens when Social Security hits your bank account and you're also dealing with old debt. There's one detail in that situation that most people do not learn until the pressure is already on. I'll see you then.